Hi all and welcome back to another episode of the ICAS Energy Foresight podcast. Gas shoulder season and it's critical season for Europe. With me I have Andreas Schroeder that is going to help me understand everything that is happening on the gas side and trying to anticipate what might come next. Hi Andreas.
Hi there.
So we are in the midst of the shoulder season, and this year is very important for multiple reasons. First and foremost, Europe used a lot of gas during the winter, and we ended the winter season around 33% gas in storage sites, which is lower than last year, not the lowest. It's not a new record, so it's still pretty much on average, but it's considerably low if we look at how tight the global market is, and the fact that Europe has almost removed one of these main suppliers of gas, Russia. Which is another topic that we're going to discuss with the recent European communication around phasing out Russian gas. But let's start from the shoulder season. Andreas, can you help us understand how the season has begun and whether there's going to be any trouble in filling storage sites this year?
So first of all, we had a not so mild winter to start with, but then February, March this year turned out to be milder than expected. Therefore, the storage depletion was not as severe as many had feared. So we ended up with 33% roughly filling levels in Central and Western Europe. That's clearly below last year. Way below last year, but it's not so much below average. We have seen such a situation already in years before. 2018, 2021 are precedent cases. So nothing to worry about. And we have seen injections starting this year. So the shoulder season, as you said, has begun, and injections are slightly stronger than last year, but not much more so far. It's particularly given the situation on the market. So the summer-winter spreads as an indicator for margins for storage providers, they are not super strong at the moment. So summer-winter spreads, they have recovered for this year, but they are not super strong. So we are speaking of €1 per megawatt hour, roughly. So prices are lingering around that level, and it's not enough to really incentivize a lot of storage injections, just a little bit.
Indeed, you are quite right. The summer-winter spread, the summer-winter equation that we tried to solve in the previous episode with our guest has improved, but it's still not providing, that type of incentive for gas players to rush and to take advantage of obviously the storage sites and what do you think? Do we see also considering the fact that there is still uncertainty around storage targets and the flexibility that the European level is now being discussed? Do you see issues in terms of potentially not filling storage sites by the end of the year? And I've got another question related to, obviously, another commission's proposal after.
Will storage sites replenish to 90% this year? That's the big question. At the moment, this is still legislation. So in our base case, we have to accept and assume the fact that storage sites will replenish to 90% according to legislation, with a few exceptions only. Now, the EU Commission came up with a proposal which is now being discussed between Parliament, Commission and Council. And so the proposal would foresee a relaxation of those storage targets for November. The filling rates would be relaxed, they could be lowered by some margin, and they could possibly also be stretched in terms of timing. So towards 1 month later or 1 month earlier. So a bit more flexibility for storage providers, and that would imply that storage sites in Germany and other countries, European countries, would maybe not replenish to 90%, but some lower levels. And this is increasingly likely now because there are compromise amendment proposals which have high likelihood of being passed. Therefore, we believe there will be a flexible storage target this year. And also, Germany has forged ahead already with some national laws. So there's a draft regulation in Germany which proposes a lower storage target from 90% to 70% for the November target, even scrapping the October interim target. So therefore, we can believe there's much less storage injection demand this year compared to previous years and compared to what some people have feared.
And as I anticipated, I've got another question around, a possible new piece of legislation, which the Commission just proposed this week, around phasing out for good Russian gas. And obviously, this might have an impact. Probably not this year, but definitely in the years to come. Even though there is a provision around trying to stop spot purchases already by the end of 2025, where do we see the boundary between real politics, which is somehow why this piece of legislation was, this proposal was put together, and market realities actually kicking in? What's our view, Andreas?
That's a very interesting case. The EU Commission came up with a new proposal to phase out Russian gas just on 6th of May. And this was a long-awaited plan. They had already delayed this publication. And even this publication now, which is just a communication by the Commission, it's a bit disappointing in my view. And I share the disappointment with some market players and some commentators. So there's little flesh to the bone, as you could say. There's little detail on what really the Commission would do in terms of legal proposals to ban Russian gas and to break existing contracts. So the proposal has one thing that I believe is likely to happen. So this year, no new spot contracts, no new short-term contracts being closed with Russia as of next year. So that would be a short-term measure. And also, I believe the Commission will be able to increase the transparency on contracts and on deals with Russian players. So that's maybe the feasible part. But then breaking the existing long-term contracts, which is then foreseen for 2027, end of 27, this is something that is quite hard to do. And the proposal lacks details on how they would really enforce and make even the critical players compliant with this rule, such as Hungary and Slovakia, which have existing long-term contracts with Russian players, which the EU Commission proposes to break.
Yeah, as you said, there are not a lot of details. There's a consistent theme of more detailed proposals coming in a month or so across all the different actions that were part of the communication. But realistically, one wonders how much can happen when we look at long-term contracts, and how much that what are the limits from a legislative point of view on that front. If we flip it to the market side and volumes, it would be quite interesting to see how that unfolds, because on one side the Commission referred to that and is also coherent with our view. There is length in the global LNG market coming towards the end of next year or 2027, depending on obviously the speed at which new projects will come to market. And there is also limitation for Russia, big limitation in redirecting flows in the short term towards Asian markets. But let me ask you a question, like looking at the next 6 to 9 months, and exactly around that. The market is not too long this year, and there is still competition between Europe and Asia. That competition is now reflected into some sort of parity, which is very volatile. The TTF was at premium for a great part of Q1 over the East Asian index that we price. How do we see that behaving in the second part? Is Europe gonna outcompete Asia? So do we expect TTF to remain at premium over the East Asian index? Is oil gonna play a role in that, given that oil prices are sliding at the moment? What do we see, Andreas?
Yeah, so we are looking a lot at the spread between East Asian prices and European prices because they are an indicator to that question, where does the LNG flow towards? And it's especially the American LNG supply that is quite flexible and that changes its destination depending on the price. So as you said, Q1 had a strong premium for the European prices. So a lot of American LNG was heading towards Europe. And we've seen very strong intake of LNG into European ports. We are on track to get not the highest record year, but another very strong year of LNG imports into Europe. Not beating the 2022 record, but coming close to it. So that's our expectation. Whilst Asia has been a bit disappointing, especially China, the LNG intake into China was a bit less than expected early this year. We still see it growing year to year, but a bit less than before. So we could say China is renouncing a bit, and other players in Southeast Asia are renouncing a bit due to higher prices in Europe. So Europe is benefiting from a premium price to East Asian prices. But at the moment it's at parity. So we will see how that unfolds in the coming months. We believe this parity could hold, or the premium could come back for Europe to attract enough LNG for the upcoming winter.
Thanks a lot, Andreas. It's super interesting, and it's tight market, and it offers it's very dynamic, and it'll be very interesting to keep trying to anticipate what happens. And there is a new publication that we're working on at the moment that we probably see the light just after we publish this podcast, our second half of the year outlook, with a dedicated webinar around that. So spoiler, be prepared. Again, thanks a lot for the chat, Andreas. And as always, if you want to know more about ICAS Energy Foresight, visit our website, icas.com, or reach out directly. And to the next time.
Thanks. Bye.